Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Thursday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers, guys, and I'm super excited to be back. But let's take a look at the portfolio, how we've been doing on the different metrics for the day, the week, the month, the 3-month mark, the year, and of course all time since I started investing. Then we're going to take a look at the individual holdings and how they're performing currently. And then, of course, what is on my watch list and Berkshire Hathaway. So let's take a look at the specs real quick for today. We are up around $142. Then the 1 week mark, we are up $291. The 1 month mark, we are down about $2,600. 3 month mark, we are down $6,700. Then for the year, we are up $4,400. And then all time, we are up $12,317.11, up 34.44% all time. Gotta love that, guys. So even in the short term, even as the market's had its fluctuations in the past, couple of years, even over the past year, we're still up. So long term, guys, we're doing phenomenal. Now, jumping right into the portfolio, first off, we have my favorite real estate holding, that being Realty Income. Today, we're sitting at 141 shares, $9,700 worth of market value. $67 is our average cost. And then about 21% of the portfolio is sitting in the Realty Income position. So a pretty decent, about a fourth of the portfolio is sitting in Realty Income stock. Today we're down $90 total. We are up $240, and a dividend coming in on the 15th of $34.90. Gotta love that, guys. Consistent cash flow every single month from Realty Income. This is what I mean when I say I feel like a landlord. It's because every single month I get this dividend payment. Quarterly, they boost it up by a little bit, so I'm guessing by the end of the year I'll probably close to $35 passive income per month. Gotta love that. Next up, we have Altria Group, 300 shares, $12,500 of market value. Average cost is right around $47.50. 27% of the portfolio is in Altria. Today we are up $180. Total, we're down $1,700, down 12%. Great buying opportunity here for Altria. Then, of course, we have Altria paying us a dividend coming here in the next week on July 11th of $270. Then we've got Coca Cola. We've got 2.3 shares, $144.93 of market value. Average cost is right around $63 a share. 0.31% of the portfolio is in Coca Cola. Today we're down $1.18. Total, we're up 38 cents. Gonna add more Coca Cola. The reason that it's at a decimal is because I got a reward stock from Robinhood, and I picked Coca Cola. It was like $10 in the stock or something like that, and then I just put the rest of the $10 that I had sitting in my brokerage into Coca-Cola. Then I've got Abbvie, my best performing stock to date, 85 shares, around $13K in market value. Average cost is right around $87 a share. 27.5% of the portfolio is in Abbvie. Today we're down $45. Total, we're at $5,500, up 74% on this holding. Next is the newest addition to the portfolio, and a company that I just swapped out. So I did own AT&T, but as of yesterday, I swapped it for 12 shares of Cracker Barrel, $1,055 of market value. Average cost is $85.73. 2.24% of the portfolio is in Cracker Barrel, up $20 today, up $26, or 2.6% on Cracker Barrel. So guys, currently, the way that I figured this out was I did the ratio for dividends paid, and right now, Cracker Barrel, as long as it stays below $96, it's a buy for me. That's about my $96 to $98 is my cutoff for where I'd quit buying it and switch it back into AT&T. So as long as it stays below, that $96.80 mark, $96.80 or $97 mark, that's where my cutoff would be. So I have about $10 of fluctuation to make it about even with the value that I would have been getting with that AT&T buy. So happy with this position. I think it has a great room to grow. As you guys can see, over the past year, it's gone up as high as 150, around 150 bucks, and I have it at around 90. So I have about $60 of upside with this current position, and I plan on doing exactly what I did with Abbvie, buying it at a low position and then letting it ride up until I get up to that 150, and then I will reconsider if I think it's going to be a really good long-term play. If not, I might just sit there and hold that dividend and let that cash flow do what Abbvie's doing for me currently, which is buying another share of, say, Walgreens or even Rowe Price if it's applicable. But yeah, guys, I'm just letting this one ride out. So super happy that I saw the deal in the market and I'm taking full advantage. Then we've got Aflac, a nice buying opportunity. Still not as great as Cracker Barrel, but still a good buying opportunity. 180 shares, $10,000 of market value. Average cost is $60.79. 22% of the portfolio is in Aflac. Today we're up 73 bucks. Total, we're down about 800, down 7% on Aflac. A good buy here for us currently, since our average cost is just around $61. So a little bit of a buying opportunity there, but not as much upside as I see in Cracker Barrel. Then, of course, we've got Walgreens, which looks like it picked up a little bit today. We have 15 shares, $570 of market value. Average cost is $43.18. 1.21% of the portfolio is in Walgreens, very close to being a dividend aristocrat as well. Today, we're up $3.45. Total, we're down $77.57, down almost 12%. So, guys, our average cost is $43. It's sitting at $38. So, about $5, $39, $44, $142, $43, $44. So, $8, $5 to $8 of upside, depending on when I decide to buy it. Great yield right now, just not the best buy that I can find in my portfolio at current prices. But, guys, still not a bad buy. So, any new capital that I put towards the portfolio is going to be going towards the Cracker Barrel investment because I see such upside potential there. So I'm excited to be adding to that position. Next, guys, we're going to go over the watch list, and currently that sits with PepsiCo, and I want it around 150 bucks, so I have quite a drop. I want to get that yield closer to the 3% range instead of 2.6. I want it to 3 to 3.2%. So I'm not interested in any yield that's lower than 3% with Pepsi. I don't want it. So that's historically a high yield for PepsiCo. But love all the brands. Of course, they've got Pepsi, they've got Frito-Lay, they've got Mountain Dew, they've got all the energy drinks that they're doing. They have a new Mountain Dew alcohol out. So they have a lot when it comes to consumer brands. They have a huge lineup of very popular brands. And honestly, their revenue is pretty much split 50-50 between food and drink, and that's why I want PepsiCo, because I do have Coca Cola, but that lacks that food area that PepsiCo is so strong in. So that's why I want to add PepsiCo. It's a company I understand. They have great financials. They've increased the dividend for 50 years now. So they just have Frito-Lay and as well as Quaker Oats, and I want that exposure. So, guys, I want to get this at closer to a 3% yield, and that would be around, I believe, like 150 bucks a share. Then I got Procter & Gamble at 145.35. Guys, I want to get this down to like probably 135, maybe even 130 if I could get it closer to 2.9 to 3% yield. So that would be my current look for Procter & Gamble. I want it to come down a bit. This is not a bad price at all, 145. It's got about a $20 upside, but I would rather have a $45 upside instead, so I'll just sit pretty and wait. Still love the products, just kind of the same deal as Pepsi and Coke. Big consumer staple brands. People know the names of these brands. They trust these brands. They have laundry detergent. They have body soap. They have deodorant. So just everyday products that you probably use. And most of the time, people don't even realize that they're using these products. So Procter & Gamble is one of those like make money in the background, and even though it's right in front of your face, you might not know all of the brands that they own. So love Procter & Gamble, but I would want to get them at like a $135 price. Then we've got Rowe Price, which I could buy today and be happy. So 52-week low is 104. It's sitting at about 119, and 52-week high is 224. So $100 of upside per share right now on Rowe Price. Definitely want to be buying it as soon as possible. So next we've got Berkshire Hathaway, which right now, again, just like Rowe Price, crazy big upside, about 278. So at about 280, it had almost $100 of upside. So about a $70 upside right now. Love it, love it, love it. and I love Berkshire Hathaway. I'll be going to every single meeting for the rest of my life because I loved that experience so much. So guys, let me know what you guys think. Currently, I think the best deal right now for stocks within the portfolio is definitely that Cracker Barrel investment. I think that's going to be a huge payoff. It's a great find, in my opinion. And then, of course, I think Rowe Price is the best priced stock on the watch list. So if I could jump into Rowe, I would. It's just not the month that it pays quite yet. So the Altria dividend is going to be going into Cracker Barrel stock, which should buy me it's like 270, so 1624. So about three or four shares, about 3 shares of Cracker Barrel. So I should be at 15 shares before the end of the month. And then anything that Abbvie or Cracker Barrel pays me, as well as O, will be going into whatever I feel is a better deal. So right now within the portfolio, Walgreens is a great deal, so I'd buy that. But if Rowe Price still remains having the most upside, I'll buy Rowe instead. So I'll keep you guys updated. But thank you guys so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. If you guys are excited that I'm back posting videos on a daily basis, I'm super pumped. We're still sitting pretty at $47,000. At one point, I know we hit 50K, which is awesome. Let's see if we can get back up to that 50K. But market fluctuation is a good thing, guys. Remember that. In these high inflationary times, keep in mind that when there's blood in the streets, when there's red in the portfolio, that is not a reason to sell. That just means that there are great deals on quality companies, and if you buy them at a lower price, you lock in a higher yield, and that will just keep compounding at a faster rate, right? So no worries, guys. Thank you guys so much for watching. Like I said, remember to subscribe, and I'll see you guys in the next Robinhood portfolio update. Take care, guys.